Gold traded bearish yesterday and has dropped below the critical support at 1960 before closing at around 1968. So now what to expect today from gold? How to profit? We will see with the help of charts and indicators. If you are new to the channel, do subscribe to the channel and please press the like button before leaving the video. Do share and subscribe as well. And yes, your every comment gives me a motivation to deliver to the best of my ability. Now look at the hourly charts for gold. You can find out the straight bearish drop here, then the retracement. Now if you look at the retracement here, you will find, see, multiple candles creating a wall here at 1970. There was a breakout towards 1972, failing to sustain. We have seen it reversing and all the candles so far have closed below 1970. Now if you recall, yesterday 1970 was the selling entries. Now 1970, which was the selling entry, is a buying entry for the day. You can buy if you see the gold prices staying above 1970. But let's have a further detailed look. If you look at it, is still not showing signs of bearishness. Also, you can see all the candles are getting the support on the downside. Thus, we will wait for it to break on the downside, and on the downside still there is a support which will come into picture at 1960 1958 levels. Very strong support there. Now see, stochastic has dropped. MACD on the hourly charts has dropped and retraced here. It is trying to rise. And if you look at the waves here, first wave, second wave has completed its down move, now trying to trade in green. Possibility for a further rise exists. RSI comfortable. Coming to 2-hour, likewise on the 2-hour charts, the drop, and it may try to create a wine glass formation here with the long tail, and possibly it can retrace towards these levels. But then there are greater resistance, first at around 74-75, then at 78-80. Very good resistance exists around these levels. Stochastic is overbought. MACD has crossed over at bottom, trying to trade with little divergence. If you look at MACD, first wave, second wave, third wave, is the red part is done, the bearish part is done. It is trying to trade in green from here. RSI is flat. On the 3-hour charts, first is the crossover between the moving averages here, which are trading with divergence. This is a bearish sign for gold. And remember, on the 3-hour charts, this crossover has come after a long bullish move. So for the entire month of October, we have seen after this crossover, gold is staying bullish, and now it is crossed over for a sell. This is an indication that as long as 1980, which is going to be the greater resistance, is respected, possibility of a reversal will always exist strong. Now if you also look at the 3-hour charts here, see higher highs, lower lows in the preceding candle, and 1972.5 1975 zone appears to be a greater resistance here. Stochastic overbought. MACD was trading with a fat belly in too much of divergence. It should converge. It has converged. It may try to cross over, and it is not mandatory that it may cross over, but yes, even if it crosses over, that is a retracement only. Below that, further drop can be expected. Now looking at MACD, see how beautiful it is trading. It is trading in this bearish zone, trying to create a swing waves or sine waves. RSI was oversold. It has come out of the oversold zone. On the 4-hour, similar observation, resistance at 1970. After the long drop here, it is retracing. On the 4-hour charts, 20 and 50 period moving averages have also crossed over. And likewise on the 4-hour charts, this crossover has come after almost a month of bullishness here. It crossed over here in the October, and now after 1 month, it is crossing over for a sell position. Stochastic is rising here. The MACD is trading with extreme divergence. That is why we can see little convergence here. Now little convergence can bring slight bullishness, but still I will not treat this as complete reversal. I will not treat this as completely bullish unless and until 1980-85 levels are breached on the upside. RSI oversold and coming out of the oversold levels. Coming to the, now this is important. See, at this point I had mentioned that too much of divergence of price from the 20 period moving average calls for it to converge. That time the 20 period moving average was far below levels at around 1940 1950. Now with the time, the moving averages have climbed up here and the prices have retraced. With the slower bearish bias, prices have retraced and achieved these levels. Now another point to look here is yesterday's move was a bearish move, but look at the body size here. It is almost 40% of the complete move here. This suggests that bearishness has diminished a bit And now the 20 period moving average, which is sitting at around 1967 levels, is giving it a very, very good support. But also one must note, see, yesterday's candle was a breakout candle, and that is why we have seen a stronger bearish move here. A flat top suggests that the momentum was stronger on the down. Stochastic at bottom here. Now this is important on the daily charts. Look at the MACD here, crossed over at the top, and this is what I had mentioned in our analysis on my weekly charts, on my webinar, and in the daily analysis as well, that this crossover is happening at a higher levels and it may continue on the downside. Now before I look into much detail here, if you also want to learn this art of trading, you can join my mentorship batch. The 27th batch is going to start on 28th of November. Remember, first invest in learning. This is the only investment which can reap profits to you for lifetime. Thus, register for the batch now itself. You can register by visiting the platform forexfunder.com. On the first page itself, you will find the details related to batch, whether be it the timings, be it the curriculum and further services, everything is available. You can fill in the form and register here. The fees is also you can directly pay at the site itself, and we are going to conduct this batch here in this website itself. Also, you can register for the webinar. The next webinar is coming up this Saturday, and in this webinar we will see the insights for the moves of the markets in the coming week. We will look into detail and I will take up your queries, answer to your questions live on the webinar. Just click on this. This is an interesting session here. And also this platform has much more than this. You will find the breaking news from across the globe. You will find the economic calendar, the charts. You can look into your favorite instrument, be it bonds, economy, or be it indices, commodities, forex, futures. Anything which is getting traded is available here. You can look at your charts and do a study. You can also book a call if you need any consultation with me. And yes, the important part is the availability of the discussion forums where you can discuss with the like-minded traders. Join the platform forexfunder.com. Now coming back to the analysis, see this crossover is the top suggests that the bearishness is still going to continue for a while. Possibly today again we may see gold trading bearish. RSI is looking downwards here as well. Thus this suggests that a retracement towards 74 75 levels could be a possible or a good selling entry. But remember, rather than selling on the rise, you should sell at a comfortable levels on the downside, and that is why you can sell here at 1964 levels today. 1964 if you are selling, 1960 and 58, rather I will say 1958 is going to be the first target for the day. Below 1958 is where more bearishness may prevail. I will look forward to 1954, 49 and then 1940 levels. Now 1940 is going to be the 50 period moving average. Yes, if it starts to slide, it is going to be a greater drop, but right now it is not showing much signs of bearishness as of now. So even if it tries to drop, we have to be careful at least at around 1958 levels. That is going to be a greater support, and then 1954. If these two levels are taken, certainly we may see a stronger slide on the downside. Now on the upside, I will recommend you to buy at 1970 with a caution note that 1972.5, 1975 is the resistance zone. If you are buying at 1970, be very alert, be very cautious. It can reverse any point of time, as there are still signs of slight bearishness, if not complete bearishness, but also consolidation is what also we can look forward to. Thus, it is only a first above 1975 that the increased bullishness will be seen, and then at above 78 and 80 is a complete reversal opportunity where we can see bulls taking over completely. Thus, if you are buying at 1970, yes, you can buy at 1970, but with the caution. On the downside, selling at 64 may bring little bullishness, may yield you good profits. First support at 1958.60, then 1954, and below that is where the complete bearishness will be seen. Take your trades accordingly. Have a great profitable trading day ahead. See you again before the US session. What that update is, well, that is the second update for the day. Join my free Telegram channel. Join my signals channel. If you want to trade as per the signals, you can join my signals channel and trade profitably. Reach out to me for any of my services, be it the mentorship batch, be it the webinar, be it the signals channel. You can reach out to me via Telegram or email. Thank you very much. Have a great profitable trading day ahead. See you again before the US session.